Welcome to ShortView Trading. This is your morning market hit for Tuesday, April the 7th. What matters today for traders? US markets were especially strong yesterday, with both the S&P and the Nasdaq pushing up 7% and change on the trading session. With that, those two indices are both pushing above the recent resistance level we talked about and have been talking about in recent trading sessions. That is the 38.2% Fibonacci retracement level. Driving the markets higher was better news flow on the health front in New York, coming on top of what we've seen in Italy and Spain in the last few days. In all of those places, the health situation appears to be peaking and possibly rolling over. But we would advise caution here. As highlighted yesterday, in markets it makes sense to buy on the rumor, sell on the fact. The fact is now in place that it appears the health situation is improving, or at least peaking. More importantly, there are a number of factors that weren't consistent yesterday with across-the-board appetite for risk. Whilst key US equity indices were higher, the dollar also went up, albeit marginally, but that is typically indicative of risk aversion, not risk seeking. The US yield curve only steepened by 1 basis point, hardly a ringing endorsement of economic reacceleration. Over and above that, indicators of financial stress barely eased. Indeed, some of them showed a deteriorating situation on the day. US high yield spreads narrowed a bit. US investment grade spreads actually widened. And indeed, if you look at underlying US 3-month LIBOR, whilst it's 10 basis points off its recent high, the gap between LIBOR and OIS and LIBOR and 3-month government bond yields remains wide and indicative of stress in financial markets. On top of those factors, it's strange that some of the defensive sectors performed as well as the general market. I'd highlight real estate and utilities, outperforming the S&P 500 yesterday. And perhaps more troubling than those factors, stress remains very much evident in emerging markets. The Rand, the Turkish lira, two examples of currencies that have performed very poorly in recent trading sessions. And so we remain concerned about a number of factors and indicators of stress in global financial markets. For full details on our 1 to 2 week approach to this equity market, please see today's daily rag, available to subscribers and on the website. So what are we watching today? Well, very much as we've been outlining in recent trading sessions, anything further from policymakers, any further changes in monetary or fiscal policy, tweaks or more detailed plans. We're also watching indicators of financial stress, as I was just discussing. Over and above that, price action is key, whether or not we are breaking out of that range or whether or not we're indeed following the great crash, the roadmap for the great crashes of the last 100 years. And then finally, there is some key macro data, in particular out of the US. We've got the NFIB Small Business Optimism Index for the month of March. So that's it from us. That's your morning market hit for Tuesday, the 7th of April. Please do subscribe on YouTube, LinkedIn, Twitter, and or Facebook. Search under ShortView Trading. Thank you for listening and stay safe.